Good afternoon and welcome to the end of week market review for October 11th, 2013. You are going to see that we ended up with a pretty good week this week after the last couple of days have pushed the markets back into some green here. So obviously we're going to be looking at a few things. We're going to be starting off by taking a look at the market news, just trying to see what's been going on and how it's been affecting the U.S. markets. We're then going to go ahead and look at some economic reports. Here we just want to get an idea of what's been happening locally within the U.S. markets and how it's been influencing the overall markets. We're then going to do some technical analysis. While we're doing this, we'll be looking at both the S&P 500 and the Toronto Stock Exchange. We'll be looking at daily charts and then weekly charts. While looking at the weekly charts, we'll be looking short-term and long-term. So we're definitely going to be making sure that we cover a large variety of time frames so we can really get an idea of where the markets are at and where they're going to be going. Once we've done this, we're going to go ahead and take a look at our volatility indicator, where we'll be able to identify just how much is going on or how volatile the markets are right now and how we should be dealing with it. So obviously we mentioned that the markets are doing pretty good right now. You can see that despite the early week declines, that the Dow Jones is up 1.09% and the S&P 500 is up 0.75%. This is all from last week's closing price. Looking at the commodities, you are going to see that they've taken quite a bit of a hit still. We've got oil down 1.89% from last week's close. This puts it to $101.74 per barrel. We've got silver down 1.89%, putting it to $21.33 per barrel. Per ounce. And then we've got gold down 3.08%, putting it to $1,270.80 per ounce. Our US Canadian pair is up about 0.5% since last week's close. It is currently at 1.0354 pips. Alright, so taking a look at our economic reports, the main thing that we like to look for is the jobless claims, and you're going to see that they were expecting around 315,000 filings. In reality, we ended up with 374,000. So it's not very often that we see that we got more than expected. This time we can see that we actually had a very large amount over and above what they expected. Definitely not anything good. We were hoping for lower numbers than the forecast. But all in all, the markets were still able to recoup some of those losses and get themselves into positive territory. So with that said, here we are looking at the S&P 500. You're going to be noticing that we're looking at a daily chart, which means each of these candles represents one day. Now we've broken back up above some trendline resistance. That happened on Thursday. As the markets broke through, we ended up continuing that rise today on Friday. Now obviously it's a great thing to see. However, we do have some overhead resistance, which happens to be around 1730. Now the MACD is now rising bearish, and with the black line over top of the blue line. You're going to see though that if we have even just a slow but slightly good day on Monday, we're going to expect to see ourselves back into a bullish territory. Now zooming back out a little bit, right now we're looking at a weekly chart where each of these candles represents 1 week, and we're looking at data that goes back to about April. You're going to see that we did end up coming down to this red line, which is the 26 EMA. We ended up finding some support there, and we've now worked ourselves back up again. So although things did look pretty negative on the daily chart, you're going to see that we've actually just come down to what we saw happen several times in the past. There's actually times where it broke down below the 40 EMA, and we still end up recouping those losses and getting back into new cycle highs. So far, this seems to be no different. Now here we are zoomed right back to about 2004. You're going to see that this is a very, very common thing to see, and it's really been doing that for most of its time here on this chart since about 2009. Now, it is also important to note, though, that we are at some seriously all-time highs. If we break back up above our previous cycle high, we are going to be back into uncharted territory. But definitely, things are looking very optimistic from a long-term point of view. The declines that we had weren't really enough to ruffle those feathers. Now, moving into the Toronto Stock Exchange, you're going to see that it is looking for some overhead resistance right now around 12,900. The MACD is rising bullish and with the black line over the blue line. Definitely a great thing to see. Curious to see how things go on Tuesday, whether or not it's going to break up above that resistance level or not. And this is because on Monday, the Canadian markets are going to be closed for Thanksgiving, so they'll reopen again on Tuesday. Now, zooming back again, weekly chart going to about April, you're going to see that the TSX has actually been doing pretty good, much better than the S&P 500 has been recently. It's definitely had its down weeks, but you're going to see that it's gradually working itself up higher and higher yet. None of the most recent declines have gone down to that 26 EMA, let alone the 40. But what you're going to definitely see, especially when we zoom back even further, going to 2004, the TSX is nowhere near as strong as the S&P 500 is on a long-term point of view. You're going to see that there's several key levels of resistance that we would still need to break through before we're at those all-time highs. That means that we actually need to go from about 12,900 up and beyond 15,000. Certainly not impossible, but not anything that we're going to see within the next couple of months. The volatility indicator has gone through quite a fluctuation. You're going to see that it ended up going up quite high, just in the 21 range. It is back down to 15.85, which is down about 6.5% from last week. If we can see this continue declining and get down below that 200 EMA, we're going to be that much more confident in the volatility. Right now, it's not as bad as it was 2 days ago, but we still should be cautious, especially since there's been no real settlement over how they're going to be dealing with the debt crisis. Alright, so if you have any further questions, you're going to see that we've got both our email address and phone number listed on the screen. We definitely will make sure to get back to you with anything that you have, so don't hesitate to give us a shout. This has been the end of week market review for October 11th, 2013. Ciao for now.